Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Lynn & Associates with your weekend update, and this is for Friday, the 10th of March, 2017. We're about 11:25 in the morning. I'm certainly 2 hours minimum early from when I normally do these, but I have an appointment out of the office today, and I won't be coming back, and that means if I didn't do it this way, you wouldn't have these videos. We've had a sell-off, a big one, taking place in the grain markets. And the question is what's going on, of course, in South America. The farmers in America, how are they doing? They still have $10 beans, so I don't think that's so bad. And where are they going to go with the corn and so on as we start talking planting intentions? They're right around the corner. Now, if we take a look at a monthly soybean chart, I've had up here now for weeks that you are in a triangle pattern. And that's exactly what's going on. So on the monthly chart, you can see that very, very clearly. When we come to an area chart of closes for the week, you can see you've gone from 1080 down to 992 3/4. That's the current low for this week. And we're only 2 cents away from that as I'm recording right now. So you certainly are in a downtrend there. When I put it on a chart like this of just high to low, you see how that break has been. And you're into a support area. This whole area down here now, you start hitting different layers of support. It doesn't mean you can't slice through them, but you're getting down when you're down 32.5 cents or 32 3/4 cents for the week. You've had a big break. If you clear here, maybe you get to the 950 area. The trend is certainly down. You're under the 18-week moving average of closes. The bias is down. And if the market keeps falling, one of the potential support zones comes in at the 100-week moving average of closes, 969.5, which fits in with this, all this previous support area. It's also matched by the weekly Bollinger Band. Now remember the Bollinger Bands, what they are. It is an algorithm designed to keep the market trading within them 95% of the time. Can they get out of it and run? You better believe it. But when that happens, normally, the predecessor to it is a pattern like this. You're not there at this point. So I don't look for that to happen right here. And by the way, I teach what to look for, how to look for it, what it looks like in my charting course. So we'll talk about that in a minute as we finish this up. Lower highs, lower lows, coming down to key support in the 970 area. I think pretty important right there if it can get down there. Now we look at momentum. Still pointing down, and are we in oversold territory? You betcha. Any number under 30 is oversold according to my interpretation of slow stochastics. Therefore, it could reach down, but you're using up a lot of power on this break at this point in time. On rallies, resistance back at 1022.5. In the meal market, prices have fallen down to the point where they're at the 18-week moving average of closes. The 100-week is right under it at 317.70. So we're into an important support area, but momentum is still pointing down. You've got here an ugly pattern of lower highs, lower lows, and the question is, will you close under the 18-week or not? And I can't answer that. You're only $1.20 away, so I wouldn't know it at this hour. Soy oil maintains its overall weakness, biggest part of the complex that's weak, lower highs, lower lows. Now, if you go to the daily chart, it doesn't look as weak as this one. But even on this break, you've had a big support area, 31.90 to 96, and the question is, will the market over time be able to embed, which means convert itself from being oversold to locking in, if you will, a very, very bearish pattern? I don't know. I don't consider slow stochastics on the longer term charts as important as the daily, but everything on the chart is bearish. We then get to the corn market, and if I were to take you back up here and you're at the upper Bollinger Band and say, okay, you got an embedded reading. If you start losing the reading, I'm going to look for price in the 18-week moving average to come together over time, and that's what you've done. The market first stopped at the 100-week average, rallied back to the Bollinger Band, and then collapsed right through it. The chart pattern is ugly right here. Now, the key in this market is to take out 355 3/4, which you have not done, because that would break the swing line pattern of higher highs and higher lows. The wheat market is similar to corn. It still has the overall pattern of higher lows, higher highs over the 18-day average of closes. The momentum of the market is turned down, but it is overbought in that process. Now, if both numbers get underneath 70, you're no longer overbought according to what I teach. The market will find probably initial support in that 417 to 419 range, because this number, I have to see what it's going to do when it reopens on Sunday night. Remember, it's going to drop past data. In the cocoa chart, you still have an embedded type of reading. You've got a market with lower highs, lower lows. It's for the day up nicely, but for the week it's still down 58 points. And the question is, does it eventually start rounding itself out with higher lows and lower highs, or is this just a pause in a market that wants to go down? That's what we have to wait to see, and I can't answer it for you just yet. When we come to the sugar chart, look at this. Back to the 18-week average and right down into the area of the lower Bollinger Band. Momentum still pointing down. Cocoa, coffee, sugar, still looking, in my opinion, sick. So we're going to get better prices for our morning drink, and I hope you join me on my morning subscriber videos, because they're pretty interesting. Lower highs, lower lows, the bear camp there. Cotton, no trend. Higher high, lower low, overbought. Don't know what to do with that. Cattle market. Cattle held on the first challenge of the 18-week moving average of closes. Momentum still pointing down, though, on the chart. Hog market. The question is, can it get through and start busting through these lows? Don't know, but I know it's not an embedded reading, and price still favors, when that happens, that price and the 18-week moving average of closes will come together. Now, as I said, I like teaching. And if you watch how I do these videos, I think you get it. You can write down these numbers, or you can look at our website. If you go to my website, go into the word education. I've created a whole video for you to learn and see I teach and how I go about it. My charting course is made up of 54 videos. In addition to the videos, you get my research. Now, my research also combines a video that I do only for people taking the course and or paid subscribers to my research. When you first take the course, I bundle a great package. Charting software that's typically about $100 a month. My research, which runs retail, about $60 a month. And the course itself, which normally runs $179.95, right? So I bundle it all together. It's right now retailed at $89.95 because I redid the course. Now I don't have to ship it out, shipping and handling and all that. We do it all online for you. And I'm offering, with an IRA 15, that's IRA 15, a coupon for a briefly limited period of time. The course will run $74.95. It includes the $100 software, $60 value of my research. Now, you see what I do, you do what I do. Then current time, you come in and you see what I'm doing in the morning and you start getting it. What do I mean by that? No matter how you do a video, you got to use past data if you're going to show real data on it. How do you bring it forward? By me recording every morning a video where I cover all the major futures markets with exactly what you're learning, and then webinars so that you can come in and ask questions of me. $74.95. If you can't bet that on yourself, shame on you. I'm Ira Epstein. You have yourself a great day, a great weekend.